Specific deductibles, probably one of the most important terms to know and be able to understand when it comes to self-funding your health insurance. This even applies in a fully insured world, but it's a different terminology. But we're going to talk about specific deductible. On the fully insured side, it might be called your pooling point, but it's generally the same concept, except for in self-funding, you are the ones specifically paying for those claims. So in this example that we have here, we have a small sample size just to illustrate what this might look like. So we have an employer here who is self-funded, and they have various claims that are going on their healthcare plan. You see here with their specific deductible being about $100,000 is what we'll say here, but this claim well exceeding over 150,000, this amount here is effectively over that specific deductible. And so for that employee here, it's one way to protect them against really high claims from an individual level. We say per belly button on the plan. So that could be for an employee, a dependent, eligible dependent is very important there as well. But it is per individual person on the plan. So even though a family might be enrolled on the plan, each individual person has their own specific deductible tied to that amount here. So what you're seeing here is a number of claims that, hey, as an employer being self-funded, you are paying these claims below this threshold here, which is a specific deductible, also very much referred to as the spec, is any claims below that you are responsible for. Any high claim above your spec level, that is typically either covered by your third-party administrator or it is reimbursed by your stop loss if you have to pay that claim and wait for reimbursement. On this side, we have some benchmarking information based off the size of employer that you are. What is the median stop loss that you can expect to have here? Now, a lot of this, again, is back to your risk tolerance and understanding that. So you might have a lower specific deductible than what we're showing here based off your group size. But in that situation, you're probably paying a little bit more in the fixed cost arena for that stability of having a lower piece here. But for those, you might also have a higher risk tolerance and willing to take on a little bit more risk than what the median is showing here. So for employers less than 100, you'll typically see about 55K. And as you see all the way down, a 5,000 plus employer, really at that point in time, you are pretty much self-funded. You are probably just risking against some of the catastrophic things. Now, we are also seeing a lot of trend towards $1 million plus claims, especially with some of these high cost medications, gene therapy, things like that that are coming out, is protecting against those very big catastrophic ones that might cost several millions of dollars. And that's really where stop loss comes in. So this is the example of a specific deductible.